All right, hopefully the market and in particular mortgage rates perform better this week than the U.S. golfers did in the Ryder Cup this past weekend. There is a lot of stuff going on, so I want to get right into the news that's going to impact interest rates. Let's first talk about the reports that are coming out. Monday, we have a pending home sales report. It won't impact rates so much as kind of dictate how the market is moving, how the housing market is moving. On Tuesday, we had the Case-Shiller Home Price Appreciation Report coming out. That is the gold standard for home price appreciation across the country. So that'll be a big one. We also have the Chicago Purchasing Managers Index and the JOLTS report, the Job Opening Labor Turnover Supply or Survey. And if we see open jobs in the 6 million range down from the 7 million, well, that will be good for interest rates. That will show a job market that is basically contracting. Wednesday, it's a big day, October 1st, for many reasons. First, it is the ADP Private Sector Jobs Report that comes out. That is the precursor to the big report that comes out on Friday, the BLS Jobs Report. Expectation is about 30,000 new jobs. Last month, we had 54,000 new jobs, which was below the 75,000 new job expectation. So if we see these numbers come in low, that's going to be very, very good for interest rates. We also have a couple other reports coming out, the construction spending report and the ISM manufacturing reports coming out on Wednesday. And that's a big day, folks. And that is a big day because of the potential government shutdown. And what happens if the government shuts down? The interest rates, really historically, interest rates have gone down, but just a little bit, but expect short-term volatility. The stock market actually ends up going up, but the volatility that we see in the market may cause some wild perturbations up or down. But here's a big impact of a government shutdown to the housing market. IRS shuts down. IRS can't run their reports for home buyers. The VA, if you're doing a VA loan, well, the VA shuts down. Well, guess what? Any VA authorizations you may need, that goes away. In some cases, what you will see is purchases being delayed, which causes a lot of hate and consternation for certainly the people who are buying, but for the people who are selling, and maybe they're trying to buy another home. That really just sets everybody back, and that's what we've seen in the past when we have had a government shutdown. So we really don't want to see that. Again, largely out of our control. Hopefully President Trump and the senior leaders in Congress will get together and make this thing happen. Assuming Wednesday, not the end of the world, Thursday, we have initial jobless claims, continuing jobless claims. Last week was kind of a stinker. The numbers went down. We'll see what happens this week. We also have factory orders that come out on Thursday and Friday. Well, Friday's a big day because it is mine and my wife's 33rd wedding anniversary. It is also a big day because the Bureau of Labor Statistics jobs report comes out. Unemployment rate last month was at 4.3%. The expectation is that it will stay at 4.3%. If it goes up, guess what? That's good for mortgage rates. Mortgage rates will go down. We also have average hourly earnings, monthly earnings. We want to see those steady, maybe down just a little bit. We also have the ISM non-manufacturing report, but really the BLS jobs report, that is going to carry the day for news. So really, that's what we'll see this week. Let's take a look real quick at where rates are as we start the week. Conventional rates, we're looking between 6.2 and 6.4% conventional as we start the week. VA, we're right around 6.1%. You know what? I think the BLS jobs report comes in down, we may get under 6% again. If we see higher new jobs numbers and the unemployment rate, especially BLS, go down from 4.3 say to 4.2, then we'll see interest rates back at 6.2. But really, I think we're going to stay close to 6% this week. Even with the government shutdown, any movement is going to be very short term. And a lot of the reason why it won't really move a whole bunch is because the shutdown isn't really a debt issue. That's not the reason why. It's really just a bipartisan gridlock in DC, which, hey, we're freaking used to that, right? So anyway, that's where we're at with mortgage rates. We'll see what happens this week. A lot going on. Government shutdown, jobs reports, unemployment, jobless claims, a lot of stuff going on. So have a great week. We'll talk to you later. Bye.